Some investors become legends because of their crazy returns. Others, it's their radical ideas. But Philip Fisher? He's one of the rare ones who became a legend for both. Today, we're going to dive into the super private, methodical mind behind the classic book, Common Stocks and Uncommon Profits. We're talking about a guy whose personality was literally the blueprint for his entire investment strategy. So let's get into the mind of this truly uncommon investor. So, what really made this giant of investing tick? Well, his son boiled it down to just three things. You ready for this? Walking, worrying, and work. Yeah, I know, it doesn't exactly sound like the recipe for a rock star life, right? But for Fisher, these three W's were the absolute foundation of his genius. I mean, they weren't just hobbies, they were the very tools he used to build some incredible wealth. And that's exactly why, to really get a grip on his uncommon method, we've got to first understand the uncommon man behind it all. His personal habits and his professional strategy, well, they were basically two sides of the very same coin. I mean, this was not a guy who was impressed by anything flashy. Think about it. While he's building these massive fortunes, he's cruising around in a beat-up old Oldsmobile. And get this, long after everyone else had push-button phones, his desk was still covered in old-school rotary dials. And this wasn't just him being cheap. No, it was way deeper than that. It was all about his focus on substance over style, a mindset that shaped his entire view of the stock market. Okay, so what about that second W, worrying? For Fisher, worrying was actually a productive thing. It was kind of his superpower. His son just nailed it with this quote. Fisher would mentally tear apart every single potential investment, thinking through every possible thing that could go wrong, until the chance of a mistake was almost zero. His worrying wasn't about being scared. It was his version of extreme homework. So this all leads us to the big question, right? How does a guy who avoids risk at all costs, who hates fads, and who worries about everything end up becoming one of the greatest growth investors of all time? Well, the answer is in a philosophy that actually turned all of those traits into huge advantages. And that brings us to his core philosophy. And at its heart, it was actually really simple. Just ignore all the crazy noise of the market and focus like a laser on the long-term quality of a few outstanding companies. Just think for a second about how most people play the market. They're reacting to every news headline, chasing the hottest stocks, jumping in and out. Fisher, he did the complete opposite. His way was patient, it was research-intensive, and it was built on this belief that if you buy the right company, the best thing you can possibly do is just hang on for the ride. He wasn't buying a stock ticker, he was buying a piece of a real business. This quote here just sums up his mindset perfectly. Fads and fancies. That's what he called all the short-term stuff that distracts everybody else. He just knew that the real money wasn't in guessing the next big thing, but in finding businesses that had real, lasting advantages. Companies that could just keep growing for years, maybe even decades. But how in the world did he find these amazing companies? Well, this is where that third W, his work ethic, comes into play. He created this legendary research technique that he called the scuttlebutt method. The scuttlebutt method is basically being an investment detective. It's about getting out from behind the desk, away from the official press releases, and finding out what's really going on inside a company. You're piecing together a complete picture by talking to literally everyone connected to it. He'd go talk to competitors to find out a company's weaknesses. He'd talk to customers to see if the products were the real deal. He'd talk to suppliers to check on its operational health. And yeah, he'd even track down former employees to get the unfiltered truth about the company culture and its leaders. This gave him an edge that you just can't get from reading an annual report. Now, Fisher himself admitted this wasn't easy, and that's a really important point. It takes real skill, a bit of tact, and the ability to get people to open up. Scuttlebutt isn't just about firing off questions, it's an art. It was the work that allowed him to do his worrying so effectively that the risk just melted away. So after all that intense work to find a truly fantastic company, Fisher's philosophy led him to his most radical and honestly his most difficult principle, the discipline of pure patience. Just think about it for a minute. When it comes to investing, what is the single toughest decision that all of us have to make again and again? It's when to sell. The urge to lock in a profit or to cut your losses, it's always there. But for Fisher, if you did your scuttlebutt right and you found a truly outstanding company, the answer to when should I sell was almost always never. And this right here, in his own words, is the absolute knockout punch. Fisher just got this fundamental truth about creating wealth. Those life-changing profits, the uncommon profits he's famous for, they don't come from zipping in and out of trades. No way. They come from finding one of those super rare, incredible companies, and then having the guts, the sheer discipline to just hold on tight and let it work its magic for years or even decades. Selling too early, he believed, was the single biggest mistake you could possibly make. So let's pull all this together. What is Philip Fisher's legacy? And what are the big lessons we can actually use today from his amazing career? It really just comes down to these three core ideas. At the very foundation, do your homework. That's all that detective work with the scuttlebutt method. The next level up, focus on long-term growth and tune out all the market noise. And at the very top, the hardest part of all, have the discipline to hold on, because that is where the real magic of compounding happens. You see, Fisher's path is pretty simple to understand, but it's incredibly hard to actually follow. It takes patience in a world that's obsessed with speed, and it takes deep thinking in a world that loves quick fixes. So that leaves us with one final question to think about. In today's world of nonstop noise and distraction, do you have the uncommon discipline it takes to invest like Philip Fisher?